This show is going to be a gold market update, talking about some of the gold stories that are going on. Today, the paper gold price in US dollars, it was down $27.40 or almost 2% at minus 1.82%. Still, over the last 12 months, the gold price in US dollars is up over 20%, up over $250. And it looks like smart money is accumulating physical gold on dips. I'll talk about that in a little bit. Maybe, as one of my longtime podcast listeners who's also a Patreon account contributor suggested to me today, maybe someone is shorting the paper price to be able to buy more physical metal cheaper. Possibly. That is a possibility. But smart money is, who are not gold bugs, there is more evidence, more disclosures that professional money managers, smart money, who are not gold bugs, are now either recommending for their clients or for their own money buying physical gold on dips. I will talk about that in a couple of minutes. So the miners are still putting out earnings announcements, and for the most part, their earnings announcements are good. Agnico Eagle, like I covered yesterday, was the first one to announce on, I think, October 24th. So in general, the industry, the producing miners are benefiting from higher metals prices the last couple quarters and oil prices going down. So that is good for margins. However, Endeavor Silver had a big problem. They reported a bigger loss and they might have to close another mine. So that's not good. Endeavor Silver is not looking good. A number of months ago, I think about 4 or 5 months ago, I said if silver closed at $18 or more, around $18 by the end of 2019, I thought that would, in my opinion, that would be a good year for silver, considering where silver was at the beginning of 2019, that going up to $18 would be good. The miners, a lot of them would not be looking at bankruptcy. So silver's having a real tough time staying above 18. You know, there's all these people saying silver is going to go way higher. It has to stay above 18. It has to go above 19. We'll see. The paper price manipulation is still very strong, but it looks like smart money is buying a lot of gold on dips. I want to read this article from, I'll read part of it, from Dave Kranzler. It came out on Gold Eagle's website today. It's called Gold Forecast, the next move higher may have commenced. And the couple paragraphs I liked in the article are: the takedown in the price of gold that began in early September served to reactivate Indian imports about 2 weeks ago. India's legal importation activity had been dormant since June after the government raised the import duty by 25%. And then he has in parenthesis, smuggled gold no doubt continued flowing, but escalating seasonal demand combined, so Diwali, combined with the recent price decline. Although I think in Diwali, I think physical silver is now also bought. I've heard of some dowries are 50% gold, 50% silver, depending upon the silver price. Combined with the recent gold and silver price, recent price decline has aroused a sleeping elephant, despite the fact that the open interest in COMEX gold futures is at an extreme high, suggestive of a short-term market top. I believe the physical demand from the East, specifically India, along with further money printing from central banks, will push gold and silver higher in dollar terms. I'm not sure if I'm optimistic, but about much higher prices in the near term. I still think gold has a good shot at going to 1600. Silver looks like there's more pressure to try to cap it at 18. There's a lot of pressure to try to cap gold at 1500, but the dips are being bought. I just hear so many professional money manager contacts I know that are not gold bugs that are talking about buying gold lately. So I think there's a lot of demand that wants to accumulate more gold on dips. That would be what I see in the market right now based on the context I speak to, the resources I have, the research and information I have. So this is a interesting paragraph here. One concern for gold bulls is the record level open interest in COMEX gold futures. Historically, an extreme high level of open interest has correlated with sharp price sell-offs between 2011 and 2016. An open interest level that exceeded 500,000 contracts was signal to remove speculative capital from precious metals positions. The open interest now has been above 500,000 since June 11th, when the price was around $1,333. Currently, the open interest hit a record 681,000 contracts last week, with the price at $1,511. Since moving above 1,500 in early August, all sell-offs below 1,500 have been short-lived. That's two paragraphs from Dave Kranzler's article. I'll attach a link to the article. It's for free on gold-eagle.com. Turd Ferguson wrote in April of 2017 a beginner's article explaining what happens with the paper's futures contracts, how open interest increases a lot, and that's used for price management. So I'll attach a link to that article. I'm not going to read the article, but there are other bullish news for gold. The World Gold Council today released another quarterly update, and 156 tons of gold were bought by central banks. So net buyers of 156 tons of gold by central banks over the last 90 days. That's $9 billion. About what the Fed creates with not QE in one day. Roy Sabag put that, the CEO of Gold Money put that on his Twitter. And finally, the last gold story I wanted to talk about was this guy who did an interview on Macro Voices this past week. His name is Alex Gurevich. He is founder and chief investment officer of Hanti Investments, and before that, he had over 20 years experience working in the financial industry and on Wall Street, considered one of the world's preeminent global macro traders. Various roles on Wall Street, including managing derivatives, franchise businesses, I think at Goldman Sachs, and also running the global macro investment portfolio at JP Morgan. That's pretty prestigious. So he was one of their head portfolio managers at JP Morgan. And he's been managing money in a family office. I guess he retired early, and then he turned that into a new money management business for institutional investors with global macro strategies. And he is not a gold bug. He has a PhD in mathematics. Normally, people with PhDs in mathematics are not gold bugs, from the University of Chicago. So that's like Milton Friedman, University of Chicago. That's monetarism. That's efficient market hypothesis, I think, too. The originators, Eugene Fama, I think, also came out of University of Chicago. So he's not a gold bug, and he just did an interview on Macro Voices that came out recently. And guess what the article is titled? The article is titled, "Stop This Conversation, Pause the Interview, and Go Buy Gold." So he is, again, not a gold bug. Now, this adds to the list of respected financial people in other industries, not in the gold community, people in real estate, billionaires like Sam Zell. He had never, prior to disclosing in January 2019, Sam Zell had never in his life bought a physical ounce of gold. And in January 2019, he disclosed he was buying physical gold on every dip and also gold mining stocks. And then you have Mark Mobius, who's not a gold bug either. And he was advising his own clients as well with his own money to buy physical gold. He did an interview this summer, a few months ago, where he sounded exactly like a gold bug. There's a number of other people. Jim Bianco. Jim Bianco is another global macro guy. He almost got a job at the Federal Reserve recently. That was disclosed, and he's been criticizing the Fed more lately, saying that they're going to have to do hundreds of billions of dollars in QE. And he's very worried about the repos because it's over $200 billion per day. When you add up the term repos that get rolled over and the overnight repos, because now we're at least $120 billion per day in overnight repos. You add in the term repos. And he's not a gold bug, and he's buying gold on every dips, and now he's sounding like a gold bug too. Yeah, it's really challenging for the silver miners. I've been talking about it, David. I've been talking about the problems with the silver miners for a long time, for the last couple of years. The silver miners, let me put it this way. When silver was at 14 or 15, late last year, early this year, the silver miners were almost bankrupt. So the silver miners are still having some big problems. So there is dip buying. My whole point here is there is dip buying in gold. So yes, the paper price was smashed today. Yes, the open interest is high. As a long-term investor in precious metal royalty and streaming companies that generate enormous amounts of diversified free cash flow and are looking for more deals and for more growth, they can smash the paper price all they want. We're going to just see more deals from Franco-Nevada and Sandstorm Gold. The amount of debt and leverage on the balance sheet of Wheaton Precious Metals and Royal Gold, they probably need to deal with some of their leverage. They carry a lot of leverage. I don't necessarily like all the leverage they carry, but the market doesn't really care too much about that. Franco-Nevada doesn't use nearly as much debt. If they use debt, normally it's paid off very quickly. Sandstorm Gold does the same thing. If Sandstorm Gold uses their revolving credit facility, which is debt, to do a deal for immediate or near-term cash flow, they try to pay off the debt in normally 1 or 2 quarters. So they don't want to permanently keep debt on their balance sheet, whereas you have companies like Wheaton Precious Metals, which Wheaton's enormous. They have an enormous amount of cash flow, a lot of diversified cash flow. But I think Wheaton Precious Metals has $1 billion in $1 billion in debt, something like that. And Royal Gold has pretty high leverage ratios. So I've talked about, I gave away that information for free, which companies actually benefit when the paper price gets smashed. But just another person, this Alex Gurevich, who is now, he just did the interview on Macro Voices. I'll put which is a good global macro podcast for free. I'll put a link to that in the information and description section. So there are more and more professional money managers, smart money people who are not Austrian School Economics, who are not libertarian, who are not Goldbugs. Maybe they've never bought gold before in their lives, and they are now looking at all the craziness that these governments and central banks are doing. You know, the latest stuff is whether Australia is talking about banning cash. They're moving further along with that. My podcast listeners and friends in Australia are sending me articles about this stuff. It's nuts. Or recently about the European Union. The European Union today, an article just came out talking about how the European Union wants a government cryptocurrency. There's been accelerated discussions of that now that China is planning on launching in the near future. And Eric Townsend from Macro Voices, the main host of Macro Voices, he wrote a book, an audiobook. You can buy it on his website, on the Macro Voices website about this. He talks about governments hijacking blockchain technology and making like a Fed coin, a centralized database for more control. Okay, this is just going to be a short little update. So I have links to all these articles and some of the tweets if you want to take a look at some of them. I'll take a look at listener questions and comments really quick, but this is not going to be very long. Yeah, again, David, with the primary gold and primary silver miners, the primary gold, especially the primary gold miners, a lot of them have announced pretty darn good earnings, but a couple good quarters is not going to make up for 7 or 8 years of a bear market. So if you have 2 good quarters, but you've had really slim pickings or no pickings at all for 7 or 8 years, 2 quarters are not going to fix things. So the miners still have bad balance sheets. The miners still need to raise capital, and there's not the appetite for institutional investors to fund these equity capital raises for a lot of the miners. Now, the money, I think where the money is going, though, for the institutional investors is going into the mining stock ETFs, but the company treasuries don't get that directly. How long can they hold precious metal prices down? Well, if they took gold back to, this is just my opinion, if they took gold back down to 1,200 again, or a little bit lower, it would start to bankrupt a lot of the primary gold miners fairly quickly. If they took silver back down around 15 again or lower, it would start to bankrupt a lot of the primary silver miners probably even faster than the primary gold miners. There's rumors that Deutsche Bank is filing for bankruptcy. I haven't seen a story on it. If you guys find there's rumors going around Twitter. I have not seen a story on it. So if you can find a story on it, you can email me. wallstreetformainstreet@gmail.com. Yeah, if gold goes to Bill Holter's $87,000 an ounce price target, it would be Mad Max or worse. You'd have to be protecting your gold. You'd have to worry about, getting killed in the street for any reason at all. It would be like Venezuela, where you would could get killed for like $5 or a sack of flour, because Caracas now is the murder capital of the world. So I'm hoping we don't have gold go to $87,000. That means that everything has collapsed. And I think if gold goes to 10,000, I think there would be immense problems in all of society. I mean, there's already problems. I think they can get worse. A lot worse. I mean, there's a ton of taxes that are being created, new ones, and existing taxes layered on. A lot of shrinkflation, a lot of stagflation lately, not being reported in any of the government statistics. Christopher says lead, then silver, and then gold. I don't think it would be a bad idea, let me put it that way. Although in a lot of countries it's illegal. In China it's illegal to own guns. Maybe in the US soon it will be illegal. If enough snowflakes and socialists are able to vote. So, a lot of smart money is now accumulating gold on dips. People who are not gold bugs. People who are looking at all the craziness that these governments and central banks are doing and saying none of this stuff makes sense. It's not just the US government. It's China. It's the European Union. It's Australia. It's Japan. It's craziness from the emerging markets. It's all a mess. It's going to be, I think, a minor miracle if something bad doesn't happen before the 2020 election. It's going to be a minor... We're seeing so many crazy stories come out and the rumors are flying. I mean, SoftBank, I should do another show on this. There's rumors that SoftBank out of Japan is the next Lehman Brothers. That SoftBank's involved in a lot of crazy stuff. There's just so many economic landmines now. Things have really accelerated in the last 2 or 3 years. Okay, well, that's it for the short little show. I don't see any super chats, so thank you everyone for your time. Thank you for my over 180 Patreon account contributors and my dozen or so monthly PayPal contributors. It's much appreciated. You're allowing me to grow my small business and give me a lot less stress in my life so I can focus on making the best possible quality content with great research, information, and analysis. And we'll see you guys tomorrow or the next couple days. I have some other ideas for some other content to do. There's a lot of interesting topics out there, but I thought it was good to do a little gold update based on the number of stories that I'd seen come out in the last day or two.